Welcome back to
Forex is
and man. You already know who this is. Your educator, investor, student, and regular Joe Jane in the building, man. I said Joe Jane, whatever you want to call it. If you want to be technical and be like, but you a girl. So why you want to call yourself Joe? Whatever. Whatever helps you stick. Okay. I'm that. I'm the plug for you when it comes to foreign exchange. Through all this information that you will be obtaining on YouTube, learning throughout your experiences. There's a lot of information, and you can go 3 to 4 different ways. So I am going to not only introduce you to it, but I'm going to plug you into some not only my educators, but other educators that I love, and I definitely enjoy watching them and be a part of their journey and being a part of their courses. I have spent over thousands, and I want to say over $10,000 investing in to foreign exchange courses. So I tell you, 4 5 years in the game, 3 years just ups and downs, not really knowing what I'm doing, not really taking it serious, but taking it serious. Last year, going through life because life be laughing, and then this year just trying to strain myself out and gain more confidence. So I am going to track the next 2 years through YouTube so you guys can see us rebuild this whole course through YouTube. All right, so now I got that spit out the way. If you are still with us, go ahead, like, share, and subscribe to this video. It's going to help encourage me to continue to get on and put up content like this. I really don't care if there's 1,000 content like that. If this content can help you and you learn something that you did not know before, hey, we're doing our job. So let's move on to it. Today, you're going to learn about some the beginner's guide of price action. We're going to give you an introduction of it. Okay. I have to give you this disclaimer because we are not liable for you to trade in the foreign exchange market. So this content shared by Forex is stupid. Church State Academy and Sharp Blue, just me, the educator, is for informational and educational purpose only. All right. Insights, discussions, and all experiences presented are from a personal perspective and are intended to inspire, enlighten, and encourage individuals on their trading journey. We do not provide financial advice, live calls, active trade signals, or any recommendation to buy, sell, or trade any financial instruments. Any decision you make in the foreign exchange market or any financial market are entirely your responsibility. Trading involves significant risk, including a loss of capital, and you should only trade with funds that you can afford to lose. Okay, don't be out here trading with your rent money or your baby diaper money or your baby daycare money. Don't do it. By engaging in our content, you acknowledge that any risk you take is your risk and your risk only, and we cannot be held liable from any losses or outcomes resulting from your trading decisions. Always remain a student. Always do your research. Consult with a licensed financial professional and trade responsibly. All right. So disclaimer here is just sole purpose to ensure clarity and protection while encouraging traders to take accountability and learn safely. All right. So now let's get into the bread and butter. Okay. So today you're going to learn candlesticks, how to basically read the open and close of a candlestick, the highs and lows. We're also going to go over the type of market trends, major highs and major lows, and tips that's going to help you along the way. Hopefully, as a beginner, even as an intermediate or advanced trader, something I may say can help you. And if it don't, all right, it's fine. Move on to another video. But if it does, make sure you like, share, and subscribe this channel and hit that button. Never miss another lesson that's coming out. All right. All right, so important steps to remember. I want you to remember these steps. So make sure you write them down, take note, put them on a sticky note, put them on your board. Just keep these steps by your side. So we're going to go 5 simple steps to begin your journey to price action trading. All right, so uh, here are the steps. All right, so step 1, you must understand candlestick charts and how they move. Step 2, being able to identify the difference between a trending market, reverse market, and or consolidation market. Okay, yeah, and or because really when I say and or, I meant and or because consolidation could also be considered a ranging market. So being able to differentiate between trending markets, reversal markets, ranging markets, or consolidation markets. All right. Step 3, being able to identify optimal trading zones on a chart using price action. And step 4, identifying accurate entry patterns that give you a statistic advantage or a winning edge. And I'm sorry, I was going to put my camera up so you guys can see me, but it just don't want to work today. So we're going to continue to move forward. As we grow, content will get better, things will get better. But one thing you can't change is technology. All right, so those are the 4 steps. But let's go into the 5th step. The 5th step is combining all of this together to create a price action trading strategy that you can utilize to pull profit out of the market. All right, the more you add to your knowledge and your experience, bruh, the more you would grow. I'm talking about you be like Goku in this thing, Super Saiyan. All right. All right. So we're going to identify which market we're in, whether you're in an uptrend, a consolidation, which is also known as a ranger market, or a downtrend. All right. Let's go over these candlesticks. All right. So let's look at this. The candlesticks, as you see to your top left-hand side, you have a green candlestick and you have a red candlestick. You also can see that same candlestick on your top right-hand side, which is a green candlestick and a red candlestick. So let's focus on the green candlestick first. All right. Um, looking, I'm not for sure what that is. One second, guys. Okay. It's just an alarm. We're already on that call, so it's just an alarm. I'm sorry. All right. Anyway, um, looking at the green candlestick, which is the bullish candlestick, you see price where the wick is at its highest. Do you see where this wick is at its lowest? And then you see you have the body of the candlestick. So at the top of this wick is where price has went the highest at that moment, whether you're on a month time frame, daily time frame, weekly, 4 hour, 1 hour. Each candlestick represent the time frame that is on. So if this is a month time frame we were on, this is the highest price has went for that month on this candlestick. Okay, as you can see as well, close of the candlestick for buying is at the top. So you buy low, sell high. So price open below, tried to push price at a high point, couldn't get there. All right, and then you have some sellers come in trying to push price down to a low point, couldn't stay there. And then boom, we close, right? So you buy low, sell high. Buy low, sell high. So there's buy low, sell high. Um, on the bearish candlestick, you have the wick, the body, and the wick. The top wick is the highest price has went on that candlestick. Then you have the opening of the candlestick. Price goes pushing below the opening of that candlestick and try to get as low as possible where that wick is, couldn't stay, and then it closed to close the body of that candlestick, right? So it's the vice versa of that bullish candlestick. When you're buying, you're going to open up low and you're going to close high. When you're selling, you're going to open up high and you're going to sell low. I mean, you're going to sell all the way down. Okay. Yeah. So bullish equal buying, bearish equals selling. And so key for bullish or buying, this is to help understand how to trade high, low, open, and close with the candlestick. Same thing with the bearish selling. The key is this is to help to identify which direction the trend is in and what type of trend it is. Not, I don't know why it says trend, whatever, but trend it is. So whether you're buying or selling, the main thing you want to do is understand how to read the candlestick, whether it's the high, the low, the open, and the close. And the second thing you want to do is utilize this because it helps you identify which direction that the trend is in and what type of trend you're in. Okay. All right. All right. Types of trend. There's 3 types of trends. You have an uptrend, you have a sideways trend, and you have a downtrend. So, well, the sideways trend also is referred to as a ranging market. So, we're going to dive deep into those. Um, Let's start off by identifying an uptrend. I am so excited about this. So the uptrend is an overall move higher in price, created by higher highs and higher lows. And you can look at the display to your left, where higher highs and lower highs are being created, and these lows signifies uptrend. Okay, all right. These higher highs and these lower lows signifies the uptrend. It also describes when the price is moving upward or getting higher. An uptrend also composed of higher swing lows and higher swing highs. So the main thing I want you to keep in mind is once price starts making lower swing highs or lower swing lows, the uptrend is questioned, and this is questioned to be either a signal for reversal or could just be a pullback, like what's going on. So you want to know if it's a retracement or a reversal. All right, so like I said, if you look at the display on my left, you have the black areas is where price is creating higher highs, and then the red areas where price is creating lower lows. So you want to keep that in mind, all right? Higher highs followed by lower lows. Okay. All right. Swing and you see these swing high to the swing low. Price swing high, then price swing low. Price swing high, price swing low. Price swing high, price swing low. Price swing high, price swing low. All right, so we got it. If you swing high, you gotta swing low. Okay. All right. Identifying a downtrend. The key when identifying a downtrend is to spot lower lows and lower highs. A downtrend is when price action is moving lower over a period of time and is recognized by price creating lower lows and lower highs. Price should be making lower swing lows and lower swing highs to confirm that the downtrend is presented. All right. So as you can see in my display to my right hand, it has the highest high. Then you have price create a higher low, then a lower high, followed by a lower low, followed by a lower high, followed by a lower low. All right, so this is how you can recognize and identify a downtrend. So the breakout strategy, all this when it comes to a breakout strategy, market structure, trending, the range markets, the structure, all that is really good when it comes to range of market or sideways trends. So you can use these strategies and techniques and all that good stuff to be able to help you trade inside of a range of market. Now, I specifically do not trade inside of a range of market, but you can use this to the best of your advantages. All right, so let's talk about range of market. Identifying a range of market or a sideways market. Here are some notes that I want you to keep in mind or write down. Price bounces between a specific high price and low price. The high price acts as a major resistant level, making it seem like price can't break through. Okay. Low price acts as a major support level, making it seem like price cannot break through. All right. So price is creating higher highs. Price is creating a high followed by a low, followed by an equal high, followed by an equal low. All right, so the buyers and sellers has about the same amount of control into the market. So the higher highs would be the buyers. It will be at the high price acts as a major resistance level, and then you have sellers who are creating price. Who is reacting to price as a major support level. Okay, and they make it seem like neither one of them is going to give a clear direction of where this trend is going. All right, so kind of like what this image says with ranging market. I'm rubber, you're glue. Whatever you say bounces off me, sticks to you because we're equal. We're ranging. It's the same highs, the same lows they made. So how do you actually identify swing highs and swing lows? Well, I'm gonna give you some key pointers that you can use to identify. The first way I want you to do is to determine the trend. All right. And how you do that is to identify whether the market is in an uptrend or a downtrend. If the market is in an uptrend, price make higher highs and higher lows. If the market is in a downtrend, price makes lower highs and lower lows. And as you can see, even when price is buying, it can rally up, which means it can buy up. It can range, consolidate a little bit, and then continue a buy. Then price can range, go off into a sell, and it can range and continue a sell. Okay, so just being able to spot these that happens in the market. Excuse me. Another way you can identify swing highs and swing lows is by identifying the highs and the lows. Okay, so the swing high is the highest point that price has reached before price starts to decline. Okay, before you start to see price pull back. This is to create a new swing high. The price needs to break above the previous swing high, all right, which is also known as a break of structure. So in this uptrend, how you can identify the swing highs is literally doing it. Identify the swing highs. When price create a higher high, that will be the new high. And then price will pull back and you have to see if price create another higher high. All right. Long as the lows are respecting each other and the highs are disrespecting each other by creating higher highs, then this will be an uptrend. Once price stop creating those points, then we can look at an opportunity for a reversal. But we'll talk more about that when we get to that. All right. Identify swing highs and swing lows for the swing low. A swing low is the lowest point price has reached before the price starts to rise. It's vice versa for the buy, right? If price fails to hold above the previous swing low, this is also called a change of character, which can, you know, be determined or it can indicate a potential trend reversal. Okay. So by knowing the swing lows, when price start creating a lower low, followed by a lower low, followed by a lower low, followed by a higher low, you know price is probably starting to change. All right. So with this change of character, you want to start to see if the trend has possibly ended, okay, or started to end. All right. So let's do it. The key pointers from analyzing the real chart is this. The steps when analyzing the charts. One, I want you to mark the swing highs and swing lows. Keep this in mind. I'm going to put an exercise up on the next lesson. So in that next lesson, you will have an exercise that will show you how to specifically mark those previous highs and previous lows. I wanted to be able to keep things all at once. So you have the course in one, and then you will have that exercise itself. Um, So yeah, steps when analyzing the chart. One, mark the swing highs and swing lows. Two, look for points where price breaks a previous high or low. And three, identify key levels where the trend might reverse. Okay, so these steps are going to help you when analyzing the chart. All trading levels, attention, all trading levels. I want you to keep this in mind. I don't care what point in trading you are, keep this in mind. If you already know this, cool. Candlestick and analysis are important. All right. And shorter time frames are important too. So when you're looking at candlestick analysis, some traders consider wicks as a valid break of structure, but it's safer to wait for a candle to close above the swing high for confirmation. So, I mean, I do consider a wick, but I also like to move the next candlestick to go to a close below or a close behind, whichever way it's going to be, so that it can confirm that the trend has ended or whatever it's going to be. On shorter time frames, it's easy to zoom into the chart. Okay, that's how you want to use the shorter time frame as a zoom in, like a camera. If I zoom in, my numbers get smaller, right? But if I zoom out, my numbers get bigger and I see a wider scope. I get closer and closer to certain things in the camera. So that's how you want to look at it in the foreign exchange market or in just a market period. Zooming into shorter time frames can reveal patterns like ascending triangles or double tops and double bottoms. This is essential when it comes to your trading because it's giving additional insight into potential trend continuations or reversals. So why is understanding swing highs and swing lows important? Or why does it matter? I don't care what type of trader you are, whether you are a swing trader, whether you're a trend trader, whether you're a scalper, whether you just don't know who you are, I don't know, you're an intraday trader, um, you're just here and there. It doesn't matter what type of trader you are. You're going to need to know how to identify swing highs and swing lows because this can help you with multiple things when it comes to trading. Okay, enable traders to identify entry and exit points. It helps understand trend directions and potential reversals, and it develops a consistent swing high, swing low trading strategy. So you can have a trading strategy. All right, it doesn't have to be that complicated. It really don't. A strategy don't have to be that complicated. It could be simple as one, two, three. Well, putting it together. But trading is not simple as one, two, three. It takes a lot of chart work and a lot of time. So here's some nuggets I want you to take away, along with the other nuggets that you can take away. By incorporating this knowledge, you can enhance your market structure trading strategy, whether you're trading Forex, stocks, or any other financial market. Knowledge is power. And as you can see, as my little display, you have price created swing high, followed by a swing low, followed by a higher high, followed by a higher low, followed by a higher swing high. And then price breaks the character, changes of character when the low disrespected the higher lows. Now it's making lower lows. All right. The break of structure was when price continued to create higher highs. So you want price to create a break of structure if you're looking for higher highs, but you want to be on the lookout for price when it makes a change in character because that could be important. It could be a important signal or indication that the market could be changing the trend. I didn't know how I wanted to word that, but yeah. So chart homework. In this chart homework that I'm going to give you guys, we're going to talk about identifying the trend, identify major highs and major lows, identify optimal trading zones, levels that must be tested in the past before it to be a valid zone, and look at a latest swing high or a swing low. So that will be on the next lesson. And I'm going to give like three different exercises. I mean, three different examples from identify the trend to identify major swing highs and swing lows to trading optimals, identify optimal trading zones, and we're gonna look at the latest swing highs, swing lows. So we're gonna be able to take this right here and go over it in the next lesson, okay? But I do want you to keep everything, keep it. All right. Then after we go over that lesson, that homework, because I want you to go practice, so you can start seeing these things play. All right, start from the basic foundation. Once we get done with that, we're gonna go into our next lesson, which is the reversal market. I want to talk about what is a reversal market. I want to talk to you about how to identify impulse versus a correction versus a retracement. How this actually relates to a reversal market and the methods that you can take that can be used to identify retracements. All right, so we're going to learn about all that. All right, and this is all important for price action because if you don't know what the candlesticks are telling you, you don't know what price action is telling you, you don't know if there's a reversal market or if there's just a retracement, if you don't know if it's temporary pullback or a long-term trend reversal, if you don't know any of this, you're lost. All right, you lost, so you gotta get tapped in. We gotta get you tapped in. All right, so make sure you guys also go check out P.E.G. Put that on YouTube, or you just type in YouTube PEG podcast. Go get you some positive affirmation, man. I love tapping into positive affirmation. I tap into trading channels. I tap into positive affirmation channels. So go check out PG Podcast on all major platforms. And make sure you like, share, and subscribe. Make sure you like, share, and subscribe to this video if you have learned something and just a little bit different. This is the base. So going into the lesson itself is where you're going to learn a lot because we're going to include the chart itself. All right, but this is just information you can note and jot down. I want to share. Oh, and if you need some positivity wrapped around you in life, even through clothes, make sure you go check out www.pegstyles.com. Surround yourself with affirmation because in trading, it depends on what you say, do in life, and what you manifest. And also make sure you go tap into our free Facebook community group that is Master the Mind, Master the Market. If you type that in, it'll pull up. And yeah, that's all I got for you right now. You can follow PG Podcast on all major platforms. You can follow me on Facebook. That's Sharp Blue, BLEAU. And again, Forex is stupid. Make sure you subscribe, share it with a friend. And I'll see you in the lesson, in the homework, so I can show you how this go. So in our next lesson or chart work when we going over the homework. I see you there. And while we're going through all this, right? Trying to figure it out, if this is just basic information or if I'm giving you all the meat potatoes, how do I actually do this? Is it going to take me this amount of time? Am I going to make this amount of money? Am I going to be able to fit for my children? This and that. Well, through all this crazy stuff that we are trying to make sense in our life, and we have trading on top of it. At some point in time, you're going to say,
Forex It's stupid.
And I agree. See you next time here at Forex Stupid. I'll see you at the chart work, man. Let's get it.